What's up, Discord? Welcome back to another market analysis, guys. We're going to be covering from the 10th through the 15th. All right, so getting right into it, we have Forex Factory opened up here. We do have tomorrow being Monday. We do have, let me turn down this music real quick. We have a bank holiday, so don't expect too much movement tomorrow. We have a bank holiday for the US, we have Canada, and we have Euro. So it's like, don't expect any movement on Monday. Mondays are usually slow anyways, but especially tomorrow. So I mean, tomorrow most likely I'm just going to be back testing in the morning. You know, usually my trading time, I'm going to look at the charts and see what's going on, but I'm not going to be expecting anything, especially with it being a bank holiday. So I'm most likely just going to be doing journaling and back testing and just doing other work. Okay, so now, getting into it, what days are we most focused on? It's going to be Wednesday. We have CPI coming in, and we have unemployment claims for the Australian as well. Then we have unemployment claims for the dollar again on Thursday, and we have Powell speaking on Thursday. All right, we have Powell speaking, and we have Government Bailey speaking as well for the pound. Okay, and then we ended off with some retail sales on Friday. So later into the week, Wednesday and Thursday and Friday, those are going to be our most volatile days. Tuesday looks pretty like calm. Doesn't seem like too much is going on. We do have some news at 2 a.m. for the pound. Nothing major that I'm expecting. Wednesday and Thursday and Friday are going to be our biggest days as far as for volatility. So those are days that we want to make sure we are locked in and we're focused on those days, making sure we're reading the price action correctly and aligning ourselves with that price action so we can make the profits. All right, now getting straight into the analysis itself, we're going to start here with GU. As you guys know, on the higher time frame, let me go here. On the higher time frame on GU, we have been going towards the upside, right? You can see we're making new highs, lows to new highs, lows to new highs, and we're constantly just going to the upside. Now, recently, what we have been doing is we have been retracing, right? We've been retracing on the intraday time frame. On the higher time frame, we are bullish, and we've been seeing bullish legs take us higher. On the intraday time frame, once we get to the hour and below, we're saying that the market has been in a bearish market cycle. We even invalidated this demand zone right here with this accumulation, right? Just getting us back into this overall leg. We do have our origin starting right here. This is the slingshot that took out this high. This is the first area that we see the market is reacting into. Now, as the market is reacting to this area, you guys can see we're building some type of range. Here's our first reaction here. We have our first reaction, market leads up to the upside. We fail to close above the high and the market comes back down, giving us our second reaction. And this time we didn't even make it to the high. This is telling me that right now we do have weak buyers, right? We don't have enough buyers yet for the market to start going to the upside. Now, we can be building an accumulation here. We have 1, 2, 3 drives, but what we would need to do before we are confident that this market is going higher is we need to break and hold above these highs, right? You can see once we went above this high here, we did not hold. We immediately came down. I mean, this is election night right here. That's election night. So that could have, you know, an effect on that and why that happened. But even after that, we're not seeing the market really maintain that buyer's pressure here. We're still seeing sellers being a part of this market as we are still maintaining highs. We're not breaking and maintaining our highs, right? We swept this liquidity here, and then this high didn't even make it up there. Okay, so that's something we want to focus on. The market is still in a bearish market cycle. Even though we tapped into our demand zone and we're seeing reactions, we still haven't gotten the change of character or anything that shows us that the market is ready to take off. Okay, with that being said, what are we looking for? Honestly, right now, I'm just going to let it sit and wait to see what we're going to do. I don't like trading within ranges because right now we're definitely in a range from this low to this high. Since we made this move to the downside, we've been inside of this range. We don't like to be a part of this range. Okay, what we can do is we can wait until we see if the market is going to at least go lower past these lows and give us some more redistributions to continue taking it lower, targeting our origin. Okay, this is our origin. This is where everything started. This is where I expect the market to at least give us a reaction. I'm not saying that we're going to explode and take off from this origin. We can. It would be the most probability, and this is where it all started, right? We have the accumulation mitigating that previous accumulation, with that being our impulsive move. So I do expect the market, if we do come lower, we could just get one more drive before we break this high. That could happen, but if I'm going to say where's the most highest probability, it's going to be our origin. So if we do come down to the origin, I do expect at least some type of reaction towards the upside. This might not lead us to a new high. It might. We don't know yet. We don't know what the dollar is doing. We have no idea what the dollar is going to move as far as in trend. I haven't seen what the trend is going to be for the dollar. So far, it's looking like we're going to get a bullish dollar. So with that being said, we might get a bearish GU and a bearish EU, and seeing those start to fall, right? We haven't confirmed that trend yet, though. The dollar is kind of slowing down now after that push and that rally towards the upside. We'll get into that as well. But just based on GU's price action and just looking at the price action alone, this is the next area that I would look for the market to come into if we don't respect this area. Now, if we don't respect this area, we will continue looking for sales until we get into our demand zone. Why? The reason is that because with that, if the market is failing this area, we could use that as our catalyst to take more sales and to target this demand zone, which will set us up for potential hedging opportunities. So meaning if we can get a sell out of this area as the market continues going lower, we can take that to hedge into a buy. To that point, we are set both ways on the buying and the selling side. Okay. So that is something we're looking for here on GU, and understand that we're still inside of a huge push towards the upside. As far as looking on it on, like, if we go to a daily time frame or like, you know, just a bigger area, this is still one huge push to the upside, and this is one huge reaccumulation right here. So just looking at the 50% of that, we could still go underneath these lows here and still respect this huge price action to give us another high. Okay, just understand that that is on a higher time frame, just because this itself is a leg towards the upside, and of course we have our internal legs being intraday legs, right? So that's the difference between like intraday time frame, lower time frame, and higher time frame. This would be considered a higher time frame leg because this would be on a daily time frame. Now inside we have our intraday legs going towards the upside, and you guys know that we trade intraday a lot more because it's a lot closer to our areas, right? Higher time frame is usually bigger areas, like here. The market is all the way over here. We're not going to be waiting for the market to come down here to take our next trade. No, we're going to take the intraday, right? We're going to take the intraday in the lower time frame plays until we get back into, let's say if the market was to come all the way down here, that's when we would reference the higher time frame structure, because that's where we're at. Okay, so we're going to just follow the market cycle and just follow the intraday and the lower time frame legs until those get invalidated, until we need to move up to the higher time frame to zoom out and see how the market is going to play on the higher time frame before we can go back trying to follow the intraday and the lower time frame legs. All right, guys, so that's what we're going to be looking for here on GU. Moving on to EU. EU is on a bearish push towards the downside. Now, one thing that I want to show you guys is we are still technically in a range. Technically, EU has been in a range this whole time that you guys can see. After we gave this distribution here, this larger distribution on the higher time frame, we can see that we came up, we mitigated, right? We mitigated the distro, we gave a push, but we never broke the low. We came back, we're giving a second mitigation, we didn't break the high. So technically we are in a range from this high to this low. EU has been inside of this price action. Okay, now technically, since we are on a distribution, right, we can say that we can see this market going lower. Now, honestly, from what we've been seeing on the lower time frame as well, and just the market cycle in general, we've been seeing this market fall to the downside heavily, right? We've been seeing the market push to the downside, and especially just breaking past our accumulations, giving us no respect for our accumulations here. We seamlessly just went straight through this without giving us any reaction from our reaccumulation here that gave us that push towards the upside. So we can see that sellers currently are in control. Now, I did see the market was reacting off of this area here. We did have a little liquidity grab out of this area, which gave us that first push before getting that reaccumulation, which gave us that second push, right? So I did see the market reacting inside that area. Now, as you can see, that reaction didn't last for long. We gave a little reaction, we gave a little push. We're not really maintaining that bullish pressure. You can see the market immediately gave us an impulse right back to the downside. So that is showing me that we're possibly just going to continue lower. And to be honest, I wouldn't be surprised if we actually start going down to make that new low, taking out this liquidity down here, which would mean that the dollar is continue to strengthen, right? Just based on the price action, I wouldn't be surprised if that happens. Just based on where we're at, I really don't see the market reacting off of anything else out of this area here, especially just seeing that the market cycle is still bearish and we're still seeing those impulses lower towards the downside. We see these huge impulses to the downside. And then even with the rallies that we're seeing back towards the upside, we're seeing that the buyers aren't as strong. They're not giving us that volatility and that impulse that we're looking for to tell that buyers want to take over this market. So just seeing that as well is kind of, just foreshadowing that potentially we're going to see more lower prices. Now, as that continues, the first thing I'm going to wait for, I really want to see how we react within this area, whether we're going to sit here for a little bit and just relax, or if we continue seeing those pushes towards the downside, we're going to continue looking for redistros. So what I'm going to be doing is I'm going to wait until we invalidate this low. So what I would like to see is coming into Monday might probably create a range, and then maybe Tuesday we see a manipulation of that range of the highs and we get that break. Once we get that break, we'll still be looking for sales towards the downside, taking those mitigations, those redistributions towards the downside, targeting that low. I do have an imbalance here as well that we can use for a target, but just taking this market lower and just following the bearish price action. I mean, we haven't seen buyers take over this market yet, so we're just going to continue following sellers as long as they continue showing themselves and trying to go for this low first, and ultimately looking to take out this liquidity as long as we continue seeing those redistributions on those bearish pushes to the downside. Okay, now finally get into DXY. Now what we want to talk about on DXY is the fact that we have liquidity to target. I'm going to delete these arrows so it's easy for us to see. We do have liquidity above these highs to target. You can see here we have a double top and we have another top here, which is creating a liquidity pool above here. Plus we also have these highs here that's never been taken. So this whole thing here is an entire liquidity pool starting from these highs here. You can see we built a range above here, but we never really manipulated the highs of those range. You can see the market just sat here for a little bit, and this is on the 4-hour time frame, so this is a lot of price action here, and we never took out this high. We never took out that initial high, so we do have a liquidity pool just across the board here because we have, boom, we have another push that never took out the initial high, and then we have another push that never took out the initial high. So we could really see this as just a trend line liquidity, with these highs being that huge liquidity pool. So if I was to say that DXY was going to go higher, I would really expect us to take out these highs here and for us to get that push. It seems like that's what we're doing. We see DXY is on a rally towards the upside. Recently we have gotten a reaccumulation here. As we can see, we have our rally, we have our base, rally, base, and then we have another rally, which is a reaccumulation. With that being said, what do we see? We see the market comes down to mitigate part of this rally here. I don't know if we got into 50%. It looks like we did, at least. Yeah, we did. So with that being said, what happened again? We see another potential rally setting itself up. So DXY itself is still in a bullish pressure. We're still seeing that bullish market cycle. We haven't seen any lows or any major lows being taken out. The first thing I would like to see before I reconsider is first taking out this low. Once we take out this low, then we can reconsider maybe, switching back and looking for a bearish dollar. But at the moment, we don't see any reason to expect a bearish dollar just based on the price action. Now, fundamentals could change that. Right, we have CPI coming in this week. We have unemployment claims coming in this week. So based on what we get from those results and those reports and the numbers that we get, if the economy and fundamentals change the price action, then we'll align ourselves to that. But at the current moment and what we're seeing just based on the price action solely alone, we're seeing a bullish dollar. So we're going to keep anticipating a bullish dollar since it hasn't given us any reason to look for sales yet. So that's what we're going to do. Okay. USD CAD kind of slowed down for us. Honestly, I still want to see if we can come back and mitigate this huge reaccumulation here. This was our last valid mitigation that mitigated this previous manipulation here. Then we gave that push, right? You can see after that push, price action kind of slowed down right here. I really wasn't interested in any of this price action. I tried to play it a little bit. When it got into here, then we started slowing down, right? Now we're seeing the push to the downside. We see the market give us another rally. Now, one thing that I've noticed and why I'm still looking for us to mitigate this area, because you're probably wondering, hey, we kind of what you're thinking is, hey, we already came back and we tapped into it right here. We gave that push, but look what we've done. We didn't maintain the highs, right? The market didn't maintain the highs. So until we come up here and we maintain these highs and the market is actually showing that bullish impulse that sits above these highs and is showing us that we truly broke that structure and it's not just a manipulation like this wick right here. Once we do that, then we will reconsider and change our area. But for now, this is still our last valid area. So if the market wants to retrace and come back into this area, I will still be looking for potential buying opportunities here, even though we have that quote unquote mitigation. I can't say it's a full mitigation until we see that impulse and we maintain these highs in that structure. Okay, so that is USD CAD. USD CAD has been bullish. We already know this. We've been following this bullish structure, starting from this low, going to this high, to this low, now going to this high, and we can see we've gotten a retracement back to the downside. We invalidated the 1 hour, which is our intraday, but right now we are on our 4 hour, which is our higher time frame structure, right? This is our higher time frame structure legs, and like I was saying earlier, we have intraday and then we have higher time frame. On the intraday time frame, you can see we have our legs here, right? You can follow our legs here on the intraday time frame, and even here going from this low to this high, this low to this high, that is our intraday. Now higher time frame is this one entire leg that broke out this high right here, and you can see that once we get this pullback, we invalid our intraday. So on the intraday time frame, we was looking for a bearish market cycle, we was looking for sales until we got to this liquidity pool here. We seen the market give an accumulation, we took out some lows. After that, we see it switch back over, going back to the upside. Now we're back following our higher time frame, expecting a new high, which that's what the market gives, and I think we'll give a larger new high. I don't think this is where the top is, to be honest. So I do think that we will show another push to the upside, giving us, an extensive high, and probably going a little bit higher before we see that retracement, probably a little bit more higher before we see that distro that gives us that retracement back to mitigate this leg. Okay, so that's how I'm looking at USD CAD at the moment. Moving on, let's go to AU. AU still a little bit. I would say AU, we're still bullish. Okay, I like this intraday push. I like this leg towards the upside here. We did invalidate our reaccumulation, which sends us into a bearish market cycle. What does that mean? That means we can be taking sales inside of this push to the downside. Now that we've gotten into our origin, you can see we have our huge manipulation. That is one wick. You can see the market starting to slow down, which is good. This is what we want to see if the market is going to show us that bullish push, if we're going to see buyers come in. Now, going down to a lower time frame, see we took out some liquidity, we took out this high. This right here is from the election night. So what am I going to be doing? I'm going to look for more price action on AU. We're still not seeing the reaccumulations, right? We haven't seen, this is our first manipulation, which is good. but we're not seeing a reaccumulation. The accumulations and the reaccumulation. We're basically seeing impulsive candles, but we're not seeing the buyers and we're not seeing the orders get built up yet. We do like the fact that the market is slowing down and we are halting, which is good, which means we could start seeing the accumulation of orders. We're just looking for those schematics before we start looking for aggressive buys or even anything at all. Okay. Now, gold has reached an important point. I was talking to the group and we talked about this area, this being our institutional level, 2,750. That is our institutional pricing. Next institutional pricing is going to be 3,000 if we want to go there. Now, this is the demand zone that I was expecting us to come to. As you guys can see, this is where we got to right here. We got a mitigation of that area and we can see we have a little bounce. Now, I'm not saying this is what's going to cause us to go higher. Honestly, I will like to see a bigger accumulation or at least just one more manipulation of something. So let's say we just build some more liquidity here and we have these lows and we get that final manipulation giving us that change of character before we start seeing buyers really take over. Okay, so what I'm saying here is do not get too hyped up about this one mitigation here. We can still come and create a larger accumulation with another manipulation taking out this low here before we start seeing that rally and that push. Now, honestly, we are at an institutional level, so this is only a reaccumulation. This is not structure. This is not, let me say, this is not a like origin. It's not like something that the market needs to hold. So as I go on the higher time frame, what I want to show you, where is our last valid area of potential buyers and potential structure? It's going to be all the way inside of this area here where we see the market had time to accumulate orders. We can see we have the market reacting off of demand zones inside of this. I don't want to go too deep into this area, but this is our last valid push, right? This is our last valid range that we could expect the market to come into. Now, okay. Now, I wouldn't expect the market to go that far. We still do have our reaccumulation here and our other reaccumulation here to get through. So if we do go past this reaccu, I do expect us to see more bearish price action until we get back into that demand zone. And then ultimately this being our main area for us to look at before we expect maybe bullish prices again. But just understand this market has been rallying for a while, so I would not be surprised if we start seeing institutions and investors start taking some profits at this institutional level, and then we start seeing the price decline a little bit and get back down to here into getting some discounted pricing. Okay, that's what we would like to see from the market, is to get into discounted pricing so we can see more accumulation of buyers anyways. All right, once the prices start going higher and higher and we start reaching these high heights, if you're not already invested into the market, you're not really going to get a lot of new buyers, right? Everyone's going to be waiting for that pullback, for that market to retrace before you look for more institutions or more buyers to get into the market. All right. US30, no surprise. We have a huge rally after election night. We have a huge rally towards the upside. So, I mean, US30 is bullish. We've been bullish for a while now. We've been making new highs. We've been following the structure. We have not invalidated any of our lows yet. You can see starting from here, this mitigation gave us that push towards the upside. We have another demand zone, gave us another push. Market came and mitigated it. We gave a retracement, filled in balance, another push, another retracement, another push, right? We're seeing this market giving us these valid pushes towards the upside. We're seeing the impulsive moves go higher. What am I looking for? Honestly, I would not be too aggressive. I would honestly wait for a retracement unless we see a valid reaccumulation on the higher time frame. So what am I saying is, don't go on the 1 minute time frame looking for a reaccumulation and expecting that to take us like to the moon, right? We're at all-time highs. So 1 minute accumulations, 1 minute reaccumulations aren't going to cut it. Yes, you can still make profit from those little moves, but understand, if you're seeing a an accumulation or a reaccumulation at this point on the 1 minute time frame, let's say you get something like this, get a tiny manipulation and the market push. If you're taking this mitigation right here, understand we're at all-time highs. So once you get this bounce and you get to this high right here, that should be a good target for you, at least to take partials, at least to take, maybe that's enough for you to take profit. But what I'm saying is treat the 1 minute accumulations, reaccumulations as 1 minute, right? They're tiny moves, okay? Don't expect that 1 minute reaccumulation or accumulation to continue us and taking us to new heights, okay? That's what I'm saying. Be careful at these highs. Don't be too aggressive. Now, if we get a more thought out structure plan, let's say the market is sitting here for a while, right? Let's say we're sitting here for a while and we're building liquidity and we get that manipulation, that's different. Now, this mitigation is different from that 1 minute or that little tiny move, okay? So that's something I want you guys to pay attention to. And this applies for this applies for NAS as well. NAS is at new highs as well. We just got to our 21,000. So we are at institutional price point. Now, I do expect the market to halt here for a little bit and play around this institutional price point for a little bit. So we might get some ranges here. We might see the market start bouncing back and forth before we either get another push or we get another rally back into our area right here, which is where our 20,000 is. So I can see us dipping right back underneath 21,000 and bouncing in between 20,000 and 21,000. Okay, so just keep that in mind. That is what I'm looking for NAS. Okay, we could get that bounce back. But if we don't, and you see the market is maintaining this 21,000, what I mean by that, if the market is bouncing off of here and we're seeing accumulations here and we're seeing the market continue to rally, continue taking buys. But if you see the market is failing to hold this price point and we're, sitting underneath it, then expect us to get a retracement. So we'll be looking for sales to mitigate this whole area, maybe getting back into the 50% and fill up all these imbalances near the 20,000, which is our other price point. Okay, now talking about Tesla. Tesla is the last one I want to cover. Last time we talked about Tesla, well, just look at it. Last time we talked about Tesla, we talked about being on a bullish market cycle, right? Starting off with right here, the accumulation, the reaccumulation. We have the high to the low, leading us to what? The new high right there. We have that pullback. We have the imbalance. Sadly, we did not make it to the imbalance, and I did say that potentially we would not get there, right? The market doesn't always go to the imbalance. It doesn't have to, okay? Okay, yeah. So the market doesn't have to, but what I want you to see here is this price action here and just watch how this has been happening. Now, of course, this happened after the election. That happened election night. We just seen stocks go insane to the upside. So we have our distribution at the top. We can see the market led us into a small cycle towards the downside. We have a change of character at this high. We have another change of character at this high. We have a reaccumulation. Let us go into the upside. We have another reaccumulation. Let us go into the upside. Now, what would I say? Well, let's get into the higher time frame. Let's see where we're at. We can see Tesla is shifting the dynamic. We're taking out these major highs on the higher time frame. That is cool. Now, I'm going to say the same thing that I was saying before. When the market gives us pushes like this, these impulses pushes with little to no price action, you want to follow the reaccumulations, right? You want to follow the lower time frame moves. What am I talking about? Something like this. You want to see something like this, right? This right here at the top is what you want to see. So look for the market to build that tiny distribution that gets invalidated. That gets you a lot more higher probability for the market to bounce and take these entries than if you were just looking for the market to give us a small move and continue higher and just trying to play that move, right? It's better to see that distribution, because with that distribution, we know that we have some institutions spending money, right? Anytime you see an accumulation, a distribution, or anytime you see any type of range, right? That's institutions spending money back and forth. Okay, it could be small institutions, it could be larger institutions, doesn't matter. It's the fact that we see that money is getting played right here. When the market invalidates that and we continue higher, no matter what they were trying to do, whether sellers were trying to get in or it was a fake out from buyers, it doesn't matter. The fact is, once we see these schematics, we know that there's potential money being spent there. So when the market gives us that final manipulation and we see that impulse that pushes us away from this area, we know that this area is a good and would be a higher probability area for us to take buys and continue the market going higher. Or if it happened the other way, let's say we see a distribution that ended up not taking us to the upside, right? It ended up failing, and we're seeing that sellers are getting control. That gives us a higher probability to take sales rather than us looking for a simple move to the downside and trying to take sales this way. Okay, this is why we look for the schematics, not for specifics as entries, but to see where the money is being at, where the money is flowing out. That's the main important thing about these markets. You want to know, where is the money at? Where are we targeting? Where are we manipulating? Where are we going to? Okay, where does the market want to go? And we do have imbalance at these areas. I wouldn't be surprised if we get a distribution that leads us in to feel imbalance. Okay, probably go imbalance. Now, of course, this area here is going to be the highest probability area. Okay, so if you start seeing a retracement and we start seeing sales, we're going to continue taking sales until we get to this area. So if this market go into a bearish market cycle and try to fill up all this price action, this is the area that we're going to look for next, because this is where we have all this imbalance. You can see we have this huge gap here. This will be a great target for you. All right, so that is pretty much it for this market analysis, guys. I hope you guys enjoyed it. I will see you in the next one. Peace out.